Hello, traders. It's 8:06 a.m. Chicago time on Thursday, the 18th of July, 2019. Sorry about the delay. I am traveling. I am talking to you from Burlington, Ontario, Canada, and it's not my usual setup. So there's always this last minute tweaking that has to happen despite all prep. Anyway, welcome to the Trader Bite this morning. It's episode number 1558. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is clearly in a risk-off situation. It is not a terrible drop or anything like that. Following some selling yesterday, it has been, for those of you who have been following since I came out to the public in 2008 on Twitter, there's this running joke that yesterday proved to be true again, probably for the 30th time, that the day I travel is a day when we have a big market move after consolidating for a while. And yesterday did not. Yesterday I was traveling all day after I did the Trader Bite, and it did not. That automated system did not fail to perform. In any case, we have risk off today, although the 10-year notes are down 2.5 ticks. The dollar's off, and so are the bonds. Believe it or not, the bonds are also off 12 ticks this morning. The DAX leading down 78 points, 0.63%. Crude is off. One comment about crude is that it is trading September now. The premium is plus 14 cents. So crude has rolled starting today. The numbers I did today were for the August contract. They'll be adjusted here in a minute to the September contract. I didn't catch that roll. And just make sure you've done a fresh download of all of your data once you roll if you're using products like IRT and so on. So crude quoting September trading at 56.73 down 19 cents, 0.35%. Crude is following what the signals or is playing out the signals that I talked about earlier this week, that it was really topping out and was looking like it was going to fall below 60. And again, currently it's below 57. The Euro stocks, Dow, even gold is down. Even gold is down. The strength is in the cable. For some reason, I have not looked into that. And the Russell, which has shown weakness relative to the other indices, the Russell 2000 is actually up. It's up 1.9 or 0.12%. The Bund is up, and the dollar's up. Really, it's risk off, but with let's just call it a slight risk off. There's a mixed bag there. There's some products that we would expect to be more positive on a risk off environment that are actually negative today, namely the interest rate products in the U.S. and gold. So that's the sentiment view. In terms of what is on the news and is pushing us around, it's the usual. It's the usual stuff. There's nothing incredibly outstanding for today. Risk aversion sentiment finds fresh legs on earnings and trade concerns. Signs of a slowdown in global growth reinforced by the latest data highlighting weakness in Asian economies. Bank of Korea and Indonesia ease policy. EU's Barnier gives signs of being open to Irish backstop compromise. That's the big kind of headline there. In terms of what is ahead of us today, we don't have much on deck today. We did get Philly Fed earlier. We got the just the usual numbers. We have Fed's Williams at 2:15. Fed's Bostic actually at 9:30 at the open this morning. An inflation rate in Japan at at 6:30 Central, 7:30 Eastern this evening, and that's really it. Let me refresh this because it seems like it is off. Yeah, Philly Fed initial claims already done. Fed's Bostic at 9:30. Um, Natty Gas, we have a 4-week, 8-week bill auction, 10-year tips auction. Fed's Williams at 2:15 Eastern, and the Japanese inflation rate at 7:30 this evening. Not much on in terms of what is scheduled. The market is free this morning to run under its own power. Before we get into the review, I'm going to throw this at you at the beginning and at the end. Today at 4:30 Eastern, there's a public open AMA. The link is right there. I will put it into the YouTube chat for you. I suggest you register even if you cannot attend. Again, 4:30 today. I do this about twice a year, where I'm open to any questions in terms of trading, and you can pre-submit your question or offer it if there is time. Offer it during the session, and it'll be answered. I'm going to prioritize the pre-submitted questions because I can organize those so things are not redundant. So that's happening at 4:30 today. Please register even if you cannot attend so we can send you the video, and we do not spam our list. You will simply get the recording if you register. Okay, you'll get the recording even if you do attend, but make sure you register to get the recording. So let's do our review here. Yesterday, the primary scenario was we're likely to drop towards 29.96, and I'd mentioned yesterday that this is likely to be to roll over, and I mentioned a big target, if you guys remember, of 29.87 and a half. 29.87 and a half. I said if we roll over, we're likely to see the 29.87 half. That is the MCLVN in a gap zone, and I believe yesterday's low was around there, and it's not a coincidence. 84.50 pushed through by about 3 points. So the primary scenario is that we're likely to continue lower and push into 29.96. Again, I'm always conservative with my range projections so that I'm not shooting outside of an area where I would get that target. Had I been short, I was not short, I was driving. And so it's that scenario pretty much worked out. It definitely finished a lot weaker than I'd expected. It turned into what looked like a trend day down. So there it is. We have an open auction in range. We have an open auction in range that started to see its first impulse right on the dot. 5.5 points, and then we get a pullback to mid. This is the setup that I had discussed. For those of you who saw the premiere show of Trading Futures with Anthony Crudele, it's on my feed somewhere. I came on as a guest, talked about the micros, the launch of the micros, and how important that is for all traders. But I also talked about this technical setup that I constantly watch. Just to offer it out as a community service, a freebie, so to speak. And that's the setup right there. A mid against the prior close, against the open, against VWAP, short, looking for a drop through this 3,375 low on the impulse, looking for a continuation. The continuation generated a second impulse. So now we have an even bigger rotation. This right here generated a bigger impulse. So now we're looking for a pullback to the stock zone mid somewhere we can lean against. So we're looking for that 3,003 and a quarter, 3,375. That would have been a beautiful set right there. Yes, this is an open auction. It went back and forth across the open multiple times. It's an open auction in range. Where does it go? It goes to 3,002.75 instead of 3,003.75. It would have been perfect. and then it starts to rotate even further down through the IB low. So we have range extension down. With a range extension down, there's a historical probability of somewhere around 27% that it's likely to take out the 3,009 and a quarter. So we're trading from the short sides. What that means, so we have an additional impulse move down. Clearly, sellers are in control, so we're not looking for longs at all at this point. The market has to prove to us or has to come to us and say longs are more safe to take on, and we're looking for a short at mid, IB low. Those are the areas of confluence that we're looking for the rotation to take out this low. Again, this is the same setup here. The market lives in fractals. Same setup here. You get short, take your first target is the prior low, and then everything beyond there is a runner. And this would be the same. Short, this would have taken about 2 points of heat, and your primary target is that last low that would have been 29.93 was taken out right here. And then from there, it's just a runner, and we're looking for 29.8750 right there. That's what we're looking for yesterday on the ultimate runner. From there, it did not provide, at least the way I trade, didn't quite provide any other setups except potentially right here. At that point, it was kind of late to open a trade because it was into the close. Yesterday, look, I've been transparent since the day I got on here with my experience and what I've done in trading and how I look at things. And most of you can know very well what things look like when I talk about them and how I see the auction, how I see the markets. Okay, I wasn't there, so it's different to look at a chart. And say, oh, there's a lot of structure here. It looks like it was a great trading day. But I'll be honest with you, I've looked at days that I botched up, and I looked back and saw it after the fact and thought, oh my God, that was an easy trading day, clean, clear rotations and structure, but I'm down on the day. So if you messed up yesterday, you were probably in the mindset of what was back here, which is the balancing, which is the balancing kind of environment, the outside in trading from the extremes back towards the center type of environment, and then the market rolls over. But I've said this a billion times. Balance leads to imbalance. The market will consolidate, which would make sense, and then something will push it. And the more the profile gets sharp, gets tight in that consolidation, the stronger the push. It's physics, okay? It's just physics. It's the laws of energy. The more you compress energy into a tighter and tighter space, the bigger the explosion, or the more volatile or more powerful the explosion. Okay, so yesterday, even though I can see here that there's some just clear structures, you can see just price action structures all over the place. There, just classic support resistance type stuff. This one didn't work here. 3,000. This would have been the one I would have acted on. 3,000, 375 versus 3,000. 275. It didn't pull back far enough to have support resistance type of structure, but it's a price action day yesterday. We finished at the low with what looks like a profile that is a bit stretched. Now, this profile actually is kind of a bit of a coin toss here in terms of where it went. We've extended beyond the 2 times IB low, and we finished at the lower end of the range, at the lower quartile, making this genuinely a trend profile. What is this trend profile missing? Does anybody know? Well, I can't wait for your answer. What it's missing is a point of control that continued to shift, signifying that the market is accepting value lower. So would normally see the point of control shift down to the low end of the range, and we end up with something that looks like this on the close, and we know that there's a high probability, historical probability, of a continuation, a strong continuation lower. Well, with the close, the way it was, the market managed to put in a lower close because the auction was interrupted by the close. Okay, so let's take a look at the overnight. The overnight, we expect it to move lower. Again, when an auction is interrupted by time, it has a tendency to continue the move because the market doesn't give a crap about time on most days. We care about time when? We care about time on scheduled releases. We care about time, time of year, seasonalities, things like that. And in general, we don't stop and turn just because the pit closed or the market closed. We stop and turn generally because we found buyers as we're auctioning down, or we found sellers as we're auctioning up. So as we reopen, so the idea behind, and why I keep mentioning that if the market finishes near the lows, it's likely to continue lower, put in a lower low. It's because if it finishes near the close, it clearly hasn't been put in an excess low and hasn't found its buyers yet, and it's likely to continue in that direction, kind of like water flowing down a hill. Okay, it's just going to follow that same path unless somebody interrupts or creates a different path for it to follow. Market is a bit the same. So I'm using these analogies to kind of instill in your mind the nature of the market. So here we are. We extend lower, push into this naked POC from way back, and we have a balanced session in the overnight with pretty good volume. We've traded a fair amount of volume in the overnight with a point of control beneath us, 259,000 contracts traded. With the point of control, we have somewhat of a double distribution profile with the point of control and the mid VWAP right underneath us. It is attempting to stabilize, but you know what? Inventory is short. It has tried to take over the close and just was unable to. This is likely to balance out today. We're likely to have an open auction out of range this morning. It is likely to continue to attempt to seek out buyers below. So 29.7750 is in question. And once we do, we are likely to take a turn. Okay. So let's take a look at what we're expecting for today. For today, let's bring in our levels here so we can see how far we need to look. All right, here we go. For today, where are my sigmas? So sigma, the first sigma is down at 29.70. All right. So for today, what is the expectation? Expecting it to open in an open auction out of range. I'm expecting this to consolidate for a bit, push down into 29.77 and 75. I'm looking for responsive buying back into the prior day's range. I'm looking for it to actually attempt to take back some of the range. Okay, we'll end up with a lower high, lower low, and a close that is more in balance today. I expect today to be a rest day. Okay, that's the primary scenario. So on the drift down, what I'm looking for is what is the quality of the movement down as it moves down. If it's not able to crush the bid and continue in a driving type of behavior, I'm going to look to lean against my predefined areas, namely the first is 29.7750 being the overnight point of control, and then 29.75 or 29.7475, which is the overnight low, basically the overnight low and that stock zone are on top of each other. I'm going to look to see if I can find a spot to buy back into the range of yesterday. We generally do not open after a trend day down and move into a trend day first, trend day immediately. It can happen. Anything can happen in the market, by the way, but it's not likely to open and have an open drive down. Secondary is it starts to is it? Oops, I drew that wrong. Secondary, we have an inventory that balances out, goes back into the prior day's close, and then I'm looking for an impulse down that brings us into the 2970 area for a bounce into the close. There is nothing special about today in terms of releases or anything like that, other than the fact, of course, that I'm doing that open public AMA after the close at 4:30 Eastern. Those are the two main scenarios. Again, I want to remind you, public AMA at 4:30 this afternoon, and the link is right there, and the link is in your chat box in on YouTube. It's also on my feed, twitter.com/futurestrader71. Okay? Good luck today. Take it easy. Let's see what the market wants to do. Remember, the idea here is we don't just jump in. We look for how the market's responding to sellers, how it's responding to buyers. Does it line itself up with our scenarios? Once it does, then we press. Okay? Good luck.